Hello, brilliant. We're back. It is I, Blurry Trade Spotting. Come in, camera. Come in, camera. How are you all today? Welcome to the show. Hit that like button. For 55 years, the most comprehensive gauge of consumer confidence in America has been the Consumer Confidence Survey from the private research group, the Conference Board. It's a monthly survey, always asking the same questions. Negative and positive answers are normalized and scaled against the 1985 data set. But what is the Conference Board? It's a non-partisan, non-profit research organization based in New York. Caters to its business members and it's made up of CEOs from multinational companies. How is the survey conducted? 5,000 different US households are posted it each month. It represents a demographic cross-section of society. They're sent the questionnaires on the first of the month. What are the survey participants asked? 5 separate questions. First 2 regard current business conditions and expectations for the next 6 months. The second 2 questions are about the current job market and expectations for the next 6 months. And the final question asks about family income expenditure in 6 months' time. Responses are categorized as positive, neutral, or negative. For each question, the number of positive responses is divided by the sum of the positive and negative responses. The Consumer Confidence Index, then, is indexed, is an average of the survey's 5 questions. More positive responses mean a higher index. More neutral and or negative responses mean a lower index. But why does the index matter? Consumer spending accounts for 2/3 of US gross domestic product, GDP. That's a measure of the value of your economy. 2/3 of it are consumer spending. So consumer confidence is a very important judge of the overall economic outlook. Pessimistic consumers, who are less likely to spend, will lead companies to being less productive. Output will slow, growth will stop, hiring will slow or stop, and workers may even be laid off. The data is released this morning, and it will give traders an idea of market sentiment. It's often combined with other data sets to give an overall picture of the economy. So it's a good thing to look at if you're wondering when recession. And you've got a general picture now of the CCI, which is perhaps more than you had this morning. If not, congratulations. It's a little bit of a refresher. There's also the Michigan Consumer Sentiment Index. Similar, it's a monthly survey of US households regarding the economy. It's conducted by phone and has 50 core questions. So many more. Strong focus on financial health, questions such as, would you say that at the present time, business conditions are better or worse than they were a year ago? Pretty easy question, right? Would you say that you are better off or worse off financially than you were a year ago? Maybe that's harder. And do you think that in a year from now, you'll be better off financially or worse off or just about the same? Again, slightly harder, right? So they get harder as they go through. Boiling a frog there over at Michigan. About 60% of each monthly survey consists of new responses and the remaining 40% of repeat participants in order to reveal changes in consumer sentiment. These are 2 consumer surveys that traders look to. They're best, though, when you combine them with many more different charts to get a better picture. For example, here you have the Michigan Consumer Confidence Index in the green line. You have yellow on the same chart with a different scale. This is SPY. Underneath, we've got ISM manufacturing data. Right? This is also a leading indicator. When it drops below 50, it suggests a contraction. So we can look when this has dropped below 50 and we can see what was going on our confidence. It's all about the confidence. And we can also check out what was happening with SPY at the same time. Now, there's something very, very different going on in the chart that hasn't happened for a long time. which may be involved in a correction. So we'll check that in a second. And down below here, we've got HYG. HYG, High Yield Bond ETF, right? The reason we're using ISM here is because we can look back to 2020 and start of 2021, March and around that time, and we can see that on the ISM, we peaked, right? We peaked, but you're probably aware of the fact that wages have continued to rise, which will bite into corporate profits. And each month that this is lower suggests a continuation of that slowdown. We can also look here to see in COVID-19 that there was a dip, an extreme dip on this indicator, lower lows. We also saw that on our confidence. But at the same time, SPY, right, that was a minor correction. This indicator continued to go down. The Consumer Confidence Index, it continued to completely collapse, even though SPY recovered from the COVID lows. So SPY was doing something that this was doing the exact opposite of, which you don't see very often on this chart, right? These tend to move together, ups, downs, ups, right? There wasn't much going on, but the up in SPY and the down in the confidence, that led to a collapse in confidence. You've seen something similar. Down in confidence, up in SPY, collapse in confidence. The market went up again, so people picked up and they were sure, it looks like it'll be fine somehow. And then no, not anymore. So there was a distinct difference the way this is going, and it's the departure between the two has never been so great. At the same time, you can see that the manufacturing contraction was incredible. And since then, it's continued to grow, though. The output is increased. And at the same time, we've got down here, this is HYG. We talked about this briefly earlier in the week. And so we were learning about corporate bonds and talking about potential corporate bond massacres coming up. And as you can see, that this is a high yield bond ETF, right? It's chock-a-block with toxic junk bonds. And it's a great gauge of the corporate and consumer credit environment. Drops indicate that worsening credit conditions. And as you can see here, which maybe you can't, but dips below any of these dips below 75, 75 again, 71, 77, 79, and currently 75. These all are in line with dips on SPY, corrections on SPY. We see corrections in SPY when the credit environment is worsening. So there's interesting things to put together. And when we're looking at all of this stuff, we can see that perhaps there is a little bit of a squeeze on margins because everybody's looking for more money for doing the same job. Productivity isn't increasing. Output might be, but if consumer confidence is low and they're going to restrict spending, then you can imagine that there's going to be a big drop-off in demand, which will also have to be met by a correction in supply. And if that comes at an already low point in the economy, or when the stock market is already on a severe downturn, which it has been, the worst start to a year in 40 odd years, and with regards to bonds, this is the worst start to a year since 1780, I think, which is quite a significant period of time. So if this correction in supply and demand comes at the same time as a steep decline in all these leading indices, it may well be that it leads to a massacre for various companies. And people would say, but this is it. This is the recession. We're all absolutely screwed. They tell you. But this is very much operating from a basis of fear. If you're a trader, what you want to do is buy when there's blood in the streets. You want to make sure that you're managing your risk and you're looking for opportunity. Of course, as a trader, you analyze the chart and look for continuation because you're trying to find an opportunity. And an opportunity would come when the markets are at lows. Now, the idea of a recession, that is different from a 20% correction in any single stock or the overall economy. That's to do with subsequent periods of negative growth. And so there's still a big question to be asked about a technical recession and consumer confidence. So let's look at the consumer confidence alone and go back and see where is it bottomed out? Where have things been absolutely terrible before with regards to consumer confidence? And we can see back here, it jumps out in around 2011, huge dip in consumer confidence, which was probably due to the previous lows and the idea that we wouldn't yet recover, right? There's always these bumps where the recovery and the expansion continues, and you catch those people out who were always professing for doom. And then here we have this previous low, that recession that everyone was worried about was going to rear its head again in 2012. It was 2008, right? So the world was like, and I can tell you because I was there, the world was completely frickin' screwed, right? And everybody was aware of it. We were aware of it. Your computer said no, right? So everybody, and your everybody's bank balance also said no, right? So in around these levels, 2008, we're worse off than that now. Everybody currently feels like shit's worse than it was in 2008. In fact, they're thinking it's as bad as it was way back here in 1980, right? In 1980, right? So in the 1980s, there was a huge yuppie movement, and I'm all up for yuppie movements. It's like, when we said we bring back the Rona and we'll all trade clover. It's the same with the 80s, right? Bring it back, right? I was born in the 80s. This is what, if you're the demographics of the people who watch this channel, we remember how terrible things were back then. Your parents will remember how terrible interest rates were and how everything was completely screwed and why sentiment was so low. And you'll also yourself probably have some idea of what's happened in the world since 1980s, right? So lots and lots of good stuff with regards to SPY and the overall world economy. So these are maybe opportunities. There are things to be cautious about, like, for example, there may be an absolute massacre in corporate bonds, but we could also look at this trend and say that it tends to catch in around these levels. If it doesn't, it's screwed. It may well have already broken down and retested, and we'll see. The horizontal level look to, if it drops below 67.91, this would be completely and utterly screwed. And at that stage, you'd say SPY might be completely and utterly screwed because the biggest correlation you've got on these charts is the toxic bonds, and SPY. Isn't that disgusting? But it's the truth of the world, right? So then we have the manufacturing data at the same time. We can see that this is putting in these higher highs. These higher highs always lead to these contractions, right? When it gets up to around anywhere near 70, right? You've seen like extreme contractions that have come with these extreme dips in consumer sentiment as well. They've all timed at the same place. You had something weak in around 60, like these has now been the most recent highs. That's like seen a slightly lower range where we've seen these collapses in sentiment. And then also what we can see on the chart here, if we were trying to time a recession, you might say that why would you, like, if someone was saying to me, I'm trying to time a recession, I'd say, well, why? And they'd say, well, because like I don't want to lose out on the value of all this, like my home, right? Well, it's okay, right? You're going to have to look at real estate for that, and you can hedge against that issue. You don't have to sell your house just because it looks like there's a recession. There's a difference between the house you live in and the commodities you trade, but you can protect against your investments using various instruments. So I'd say, look, there's ways of dealing with it, but why are you trying to predict a recession? And the answer is, generally speaking, because people are looking for massive opportunity. They're aware of the fact that stocks, generally speaking, only go up, bro, but actually they go down through massive corrections. There's huge pain, and that's usually in a tiny period of time. And if you can get in near the bottom, you don't really need to do anything to get rich over time. So people really want to time the bottom. And then I'd say, but that's impossible. You'll never be able to time the bottom. You'll literally never be able to do it, because it's one person that ends the bottom, and they're the people who time it. It's that one person in that one moment on that one trade they make. And it could be anyone with the butterfly theory, but the truth is, it's generally speaking somebody like JP Morgan, who did it in one of the worst recessions the world's ever seen. And you see now a modern day version of him, or at least likes to think he seems to like to operate as if he thinks he is Sam from FTX, who's covering all the bases of all the crypto liquidations at the minute. So who himself is going to get very, very extended and become a target for predatory investors. But anyway, so you're looking at the economy saying, oh, I think it's going to be a recession. So you can never time the bottom, right? You can never time the bottom, but you can buy things when they're relatively cheap, and you can judge that based on their own chart, where they've been before and where they are now. And you can say, it looks like things may or may not be cheap. And if they are cheap, then you're getting it better off than other people, right? Because a lot of people hold on to things and never sell them. Some funds, especially, that are long only, and they don't divest. So the economy tends to grow. You want to get in on a low, and you'll never be able to time the bottom. So I say, some people will tell you that the way to do it is to wait until prices have bottomed, have put in a bottom information, start moving to the top. And that's all well and good. And I'll be doing those kind of things. But I have a long-term portfolio that's set up over a number of years that the way that it works is that I cover with complicated hedges when it looks like the market's going down. But I still have an income from my trading and elsewhere that gets reinvested into my account. I compound my gains and I increase my position sizes when it's appropriate. When we're in a bearish market, I might not be doing that. I might be keeping dry powder and waiting on the sidelines. And am I going to make the decision to put that money in when I've already seen the bottom, when things have already started moving? Or am I going to scale into position over a period of time and build up a portfolio based again on growth when it looks like we're at the beginning of a starting point of opportunity? And that's what this seems to be to me, the starting point of opportunity. Is it that the economy might get screwed? It may well be. At that point, you can adjust and you can orientate your portfolio to take advantage of the dips while not being exposed to the loss of value of anything you're long on. You can do that. But when are you going to start adding to what might be massive opportunities? After the big moves, after the recoveries? I'm not saying go all in and put your house on it. I'm saying the time to enter might be sooner rather than looking at everything like the world is about to burn down, right? It might well be that way, right? And I've been talking about it for a while. This information that we're looking at now, that'll be taken by all those that usher in the doom. This will be taken as like confirmation that they were right. They were right to panic 2 weeks ago, but they were wrong. The time to go short was January. The time to cover was at the end of last year and the start of this year. And since then, we've been looking for single stock options that might have us an opportunity, focusing on teaching you guys to look towards futures, understanding the general indices, and then looking at all these different data sets to see what do they really tell us, right? Is this the point where everybody's wrong? Because when everybody's wrong is when the trend changes. When you're convinced, like the general idiot in the street is convinced that the economy is dead, that the world is going to explode, that we left it too late on global warming, and the dictators are going to rule the world, right? And nor do they believe that their governments are competent enough to deal with anything, right? All of that is when the idiots are wrong, right? There's right? It's screaming, it screams that even if it's not now, in any month now, because it's a monthly report, they're going to be completely wrong. And at that stage, you'd be looking for moves back to the top side. And if you're taking it on the Fibonacci, and we've got a scale here that's using the USCCI, and we'll go with this high, and we'll go with this low, the worst one. When was it? 1980. And we'll go with the high, and we'll see that so far we've not yet made it back to a 1.13 extension. We have come back to the 0 point. This is a double bottom for historically ever in the history of it ever. And at this stage, it's not that you would expect a bounce because people are going to buy it. It's people's opinion. But the majority of people are wrong most of the time, which is how it works in trading. It's not, technically speaking, when you look at all the possible options or instruments that are available to you, it's not true to say that trading is a zero-sum game, but being stupid is, and being wrong in this scenario is, right? So those people are looking at this saying the world is dying, the world is destroyed. Well, the consumer confidence Data will all come out shortly, and even if it does push lower, we're looking to perhaps a 1.13 extension. We might see how things turn around at that stage. You've also got the fact that we're putting in double bottom here, right? That's just it. That's relevant. And then the distinction at this point on the chart, you can see that SPY went a different direction. After COVID, confidence was destroyed, but the market still outperformed. And here we've had this correction since the start of the year. The 50 simple period moving average is approaching the 200. The distance between each of these, this is relevant from the consumer confidence. So look where it is. This distance from each of these, and how it's performed previously when it's been that distance from the 200 period simple moving average. How has it responded previously when it's been that distance from that mean? And things. Any trend will eventually retrace to the mean. That's the way maths work. And so even if especially in those instances where you see a trend which has an outside move, or is broken a trend line, or it's had a parabolic move, you'll know that at some stage will retrace to the mean, and that retracement will be more violent than something that's had a gradual increase. And so that speaks to why traders like to see positive retests, and why you'll see TraceBot talking about foundations, and how we'd need to, moving on from here, well, first off, we'd maybe like to go back a little bit and so on, because you want to see proper moves. If it's a parabolic move coming from a strong base, or if it's a consistent period of moves in your favor, then you'd like to see them over a period of time so that you don't face too violent a kickback against you. It might well be that way, depending on the thing you're trading, the way you're looking at stuff. Right, so that's what we've got to so far. We've talked about those things. We've explained the Consumer Confidence Index. We talked about it today because today is when it's coming up. We mixed in some other things so that you get a slightly better picture of what's going on. And much of it was based on stuff we've talked about over the last wee while. For example, if we go straight to the HYG puts and they keep SPY on the chart at the same time, talk about that. There was stuff that we were touching on there, SPY, and touching the credit environment generally for companies. And so that's everything we've got up there. It looks really good. And now we're going to go on to this dude. Where is he? Swan Dragon. That's the one. And these will do for the indicators. We'll get rid of this dude. Royce, right? Up 6.13%. His test come in here. Rolls-Royce, this is a bit of stock on the London Stock Exchange today and most days. I'm a huge fan. It's going to make huge moves. It's going to make people loads of money. And then you're all going to take the course and get better at trading, become sustainable traders, and do this for the rest of your lives, right? Deal? That's the deal we're making. Anyway, so GME today, 127.60, down 16% so far. Continuation there. AMC retracing below $14 again, down at 13.80. That's 3.4%. So AMC, yesterday's video, we talked about AMC potential moves. We spoke about how it was likely to go a different direction from GME. And it takes a backbone to stand up and say these things are going to happen, especially when your audience is predominantly GME. And the number of calls I made recently that come to the cent that are like huge percentage moves, like yesterday's 15-16 percentage moves, and I was saying it's going to happen today, and it's going to be counter to the GME chart, and it's going to go to these prices, and it went to them to the cent. It's the sort of thing that you should get famous for, that people should be like, Jesus, freaking come on my TV show and do this and whatever, right? And like everybody who knows about GME knows that I can do this, but they don't say TraceBot and lift me up and say, look, you can do it. They don't do it, right? That's because there's something wrong with them, right? There's something wrong with everyone in GME that doesn't talk about TraceBot. There's something wrong with them in the head, right? And I don't fucking trust them. And then also, but I don't do it for that. I don't do it so that I'll get famous, right? If I wanted to Mystic Meg this shit, I could do it with other shit that would get more attention, and I do it all the time anyway. That's not the point. I'm not doing it to get famous. I'm doing it to help you guys. And so when it comes to the shit I get from this audience, some of you will be watching right now, who say, "Why are you talking about AMC? You're not being honest with your audience." Fuck you, you fucking idiot! Fuck off already! I'm not explaining it again, alright? You're wrong! You're a fucking idiot! Fuck off! Right? That's the fucking end of it, all right? You don't fucking like it? Fuck off, right? Everybody else, welcome to the fucking future and financial freedom. Fuck off, idiots, all right? GME, right, GME. 127.29. We talked about this as potentially coming back because there was a number of areas to look to. On the 4-hour time frame, we had the 50 simple period moving average going up towards the 200, and there was going to be this cross. We said price action will likely come back and test it. Sitting around doing those things at the minute, that's good to see. Course recalled that. And we talked about how if it does break down to a certain degree, then it would look like it might be putting in a complex head and shoulders, at which point we'd have an inflection point on the charts, and we call it the neckline. And that's where if price action does go beyond, you might say this is a potential move. There has been a breakdown. It's following the implied targets from this chart formation, and then you'd be looking to where it might come to at the end of that move. And I'd say that the neckline on this thing, it's not really definitive where it might be on a 4-hour time frame, though you can see the complex head and shoulder there. On the 1-hour time frame, may well be that you're taking it as this downward sloping line here, right, with 2 touches. May well be that you're looking at that more as a horizontal with that wick and cutting in through the bottoms in around these levels. And this is potentially possible within complex head and shoulders, that you do tend to get this extra level of support here. So on the way to breaking down and on the 1-hour time frame, you have the 200 period moving average confluent with that potential neckline, though I'd say that that's not really what you want to be focusing on with regards to a breakout, but it is potential extensions within the current move. Looking down further, you can see that neckline would be in at around 115, 116. So that's an important area to pay attention to with regards to the test. And then there's pivot areas after that, not from within this formation due to the nature of it being a head and shoulders, but there are from the previous and the prior formations. You can see that there are areas to look to, and that would be the breakout point of the return area to when you broke down from outside this previous downward sloping channel. And this would be a pivot point around 109. So pay attention there for fake outs, retests of this breakdown, and then further decisions to be made should it be that that's the way price action follows. If it doesn't slow down in around that pivot point, which itself will be a Fibonacci extension we'll draw in a second, then you may be looking to the full implied move. Bear in mind, taking that would go beyond a 236 retracement from this most recent low to the high of that head and shoulders, and it would take you through the basis line of the downward sloping channel that you can see on the 4-hour time frame has been encompassing price action here since the 21st of June in 2020, or since the 1st of June 2021. So a lot of different things suggesting that when we've found resistance at these sort of areas, we tend to look for support in this sort of trend. It may well be that we arrest that and develop more now topside prices because in and around these levels, 120 to 130, this has been the median price action for GME within that trend, right? It's been in and around those levels. So we may well, and it's where you've seen the highest volume profile on this particular ticker. So it may well be that if you can arrest this development, like arrest this drop around the basis line there and test that psychological level at $100 or just below, especially if you've got any sort of bullish sign on your momentum indicators, then it may well be that's where you push up from. Now, I've always assumed you can exclusively at price action here, and we haven't talked about any of the indicators, and we've gone through 3 different time frames. And so you can do, and that is the way that you would lead your TA, would lead from, I mean, I've obviously got those drawings on, but that doesn't mean anything, right? I'd still be able to talk about all of this with nothing I said was referencing any of the drawings in particular, other than illustrating this support levels in around here. So price action is enough to give you a general picture of what's going on, and then you can use your oscillators and indicators to give you better detail depending on the strategy you're using. And these indicators are used to measure momentum, and this particular suite is really good for looking at swing trading, and as such you're able to say on the 4-hour time frame here, losing that 200 period moving average, having found resistance at the top side of a formation, you would be looking maybe to the stochastics to see, well, what does that say to the trend? At the minute it's very weak, very weak, but pointing to the downside. You could get a turn there. You're coming for that 200 period moving average. That's a little bit of hope. The MACD, you're setting yourself up for a sell signal if price action goes below the 200 period moving average, and you get a little bit of flux, and then the MACD breaks down through the center line. So you want, if this does bounce, to be a strong bounce and good initial reaction to either take this sell signal completely that you're potentially getting at the minute out of the game, or for this thing to pause and not break down for a while, yet grind along that 200 period moving average so that you can get a potential buy signal coming up in the MACD, which would be representative of, you know, the slower term time frames catching up with that longer term trend. And that would be confluent with this idea of a golden pocket coming, a golden cross, and the retest coming back to these areas. Very positive, right? It was also a retraced golden pocket topside, and then holding these Fibonacci levels, looking left 50%, 382, like especially, but the 50% having tested the golden pocket, that's really strong positive move. So if you can hold this 200 and grind it out, you will get a potential positive inflection. That would need to be without lower body closes on each of these candles, because you've just lost the centerline RSI. So overall, you've got potential positive signs in the 4-hour time frame, but it'll all rest on how price action responds to that level, that break, that 200 period moving average, and then that potential neckline at 115 or lower. If it is that it comes down there, if it doesn't come down there, then we'll see something interesting on the smaller term time frames. On the 1 hour is where you start, and we're not seeing anything there. There is a positive slope and a positive splay on the moving averages, but you're trapped between the 50 and the 200, having put in a lower high. So you would say that's like neutral, slanted, slightly bearish. You're below the RSI, the centerline RSI and Euro moving average, and that's bearish, slanted, bearish. And then the stochastics are bearish slash bearish slash bearish, or your MACD saying I could give you a buy signal. You're above the 200 period moving average, but you'd waste it. You'd absolutely waste it. So why would I do that? Instead, I'm going to give all my money to leprosy charity. That's what the MACD's saying. So then on the ATR, you can say you've got what, 3.62 on the 1 hour time frame, $3. You know, like when you look at the range here, the 50 simple's up at 138, that's $11 away. You know, your average true range speaks to the volatility, which would be at current levels. Is this thing look like it has the dangerous reactions, the reflexive moves in price that could wipe out positions and whatnot? It doesn't really look like it, nor does it look like it's going to exceed these levels above, and it's been putting in a downtrend, so you would look to probably it's going to continuation. You would think that, right? You think this MACD option here is likely going to be like across the top side. It's going to be a failed move, not going to break that. If it did get to 135, if it did, then you've got resistance at the previous high and this golden pocket at 139. Looks really tough. It's a downward sloping formation at this leg of the trend, so I would be looking at that and saying you found resistance a couple of times. It's coming in for what might be an inflection point, having held that diagonal and being so close to it. But you've lost your 50 simple. So if you break above this, you'll have some idea of going back to that 50 simple, and getting above it I think would be very unlikely on the hourly on the first pass, that's for sure. And instead it looks like it's going to break down, test the 200 period moving average, come into that potential first idea of an armpit or neckline at 121. However it responds there will be interesting, but I totally expect it to break down to 115 or lower, and then we'll be in for these tests. So that's what we're looking at with GME. And if the sentiment data comes out and is absolutely nasty news, then it does tend to be that you get drops in like single stock, and you know, various indices will drop. These things have got various funds that track them, and will have their own perspective on how they handle it. So as much as we love GME, we've not yet DRS'd enough or own enough of it to take it out of the hands of every possible financial instrument that will be using it for tracking these sorts of data sets. So it will be that these have impacts. Though those might be outsized or over exaggerated, and like provide us with loads of opportunity, because like we said, it isn't very often that you get the signals that we're seeing across the board on an idea that we either are going to be in for a recession or are going to bounce. Now, I understand that you'd be anxious about the idea of a recession because you've never seen one. You were never alive when there was one before in America. We have been elsewhere in the world, but in America, you've never been alive. If you're alive right now, you never lived through a recession. You know, not if you're watching this show, no danger, right? If you can hear me and see how beautiful I am, then there's no way you were alive back then. So I can understand why you'd be nervous, and it would be absolutely terrible. It might even lead to a flipping in the world order. And then here comes China. Don't we love them? Apparently, they're doing fantastic. So if you want to actually get some money out of China and watch that evolve properly, then the person to follow and see on YouTube is www.youtube.com/c/Rocky Outcrop. That's for the channel, but you can just type in youtube.com/Rocky Outcrop. Pardon me. I knew that was happening. Cheers. Yeah, visit Rocky Outcrop on YouTube, for goodness sakes. What's wrong with you? So there's the 200 period moving average, yeah. So what did we want to look to? 15 minutes to see if anything crazy was happening. There's nothing crazy. You've got a negative slope, negative display. Price action below both moving averages. You're touching the top of the bearish control zone. That's not great. Your MACD saying it's getting across. It didn't manage to give you a proper sell signal, though it did potentially here. You know, I'd say that's close enough. Close enough to suggest the price is going to come back down anyway. We called it for other reasons at the time. So 15 minutes, you can also see continuation divergence here. This is a higher high in the RSI. Price action has failed to make it higher. This is just going to kick... going to push lower than its previous level of support. It's at there at the minute, so that suggests this level is going to break. It doesn't look like it's going to hold. If you were a day trader, you'd be looking at 121 for an open now, a close there. That's what you'd be doing. If you were trading short-term expiry options, you'd probably be doing that. If you are doing this is a thing with options, right? You can trade day trade options, and you can day trade short-term expiry. Those that are expiring this week, you can do it. And I'd say, good one. If you're trading single stock options based on really good TA, and you're day trading only, and you've got a clear stop loss, which should be marked with a conditional order on the underlying, and you'll be doing that because you've got an account size that's, some people say you'll need 25,000 to do it and bother, right, with the margins on offer to be able to make any sort of a living, and they'd be right. I'd say you'd need 50. And so you're probably all of those things, and if you aren't, stop doing that. Stop doing that, trade futures, watch Rocky Outcrop, get better at trading, learn how to be a real trader instead of the silly progression that people have gone through because of the effect Robin Hood and co have had on the culture of traders and all these new introductions to the market. It's so, right, be sophisticated, make money, be smart, follow Rocky Outcrop. Right, so what else? Now we're looking at AMC. Yes, so we're in the lower term time frame. Let's start back up on the daily. Oh, we do like to be beside the daily. Right, wow signal. Yeah, it's beautiful. Let's do it again because TradeSpotting called price action all over, all the time, for ages, since he drew in the wow signal back in the start of May, right? No one's ever done that. No one's ever done this sort of thing in the history of the world ever. Drawn in that, and price action is going to do just like that, apart from Rocket Crop a couple of times, and look at how good it was, right? Now, you can go back and you can watch it. You can see, and it's insane, and it should be on some fucking Tomorrow's World. That's what it's called, right? It's called Trades Tomorrow's World with TradeSpotting, and it's on... what's that big channel? HBO Max. Every Friday. It's incredible. Right, so will be. And then, yeah, and this will be a recap of stuff I've already done. Wow, this is going to real earner for me, that one. Right, so you are lucky you get to see it all now. Amazing, right? Patreon, YouTube member. Nobody ever got this value before on YouTube channel. It's insane. Right, so this formation here looks like an ascending triangle on the RSI, but then you're not getting anything really positive here. On price action pushing slightly higher, RSI pushing higher. Okay, I can see that. You've gone through the center line. That was a good move. You've recovered the 50 simple and dairy. That's really good. The next place you're aiming for is up around 23. By the time you get there, it's because it's a 200 period moving average. By the time you get there, it'll be down a little beat, 10%. I'm not sure, but down a little beat. Price action going to get there. It may well do. You've had a very extreme move so far, though. Wouldn't anticipate necessarily going there right now. Where's ATR at? 127. So, you know, that's a significant average true range on the daily. 127, add that back on, you're up at around $15 again. Looking left on the daily time frame, the next level of horizontal support's back up at this D, 1635 and changed, and that's like not all that much. Add 127 plus 13, right? 15. Darn, doesn't make it close enough. So it doesn't look like you'll necessarily try for that all of a sudden today. Having put in a positive move yesterday, it may well be that you're looking to retest the center line on the RSI and see how price action performs around 50 simple, which you're close to now. So, I mean, this may well be the buy for the day on AMC. If you're looking at this as continuation, you've pushed above the center line, it could well be, and you've got MACD signal when you were obviously significant below the 200 period moving average, though that might be where you're looking to, and we'll compare this to the Fibonacci sequence from the most recent high above it. But, you know, that might be that the MACD was just looking to reach the center line when it did that positive cross below, because you've got every other possible negative disqualifier taking you out of that move, other than like where you would. So it was had to be like on other things like we were talking about for a reason for going long. But would you be looking at the 200 period moving average from here? No, not really. Not on that MACD signal alone. No way. You'd be thinking that this is now potential resistance at the center line. How does it perform at this 50 simple and daily time frame? You're talking open, close, open. So you've had a close and then open. You've not yet had a close, and then need that close to be above the 50 simple and the next open to be above the 50 simple, right? Body, close, body, body, close. And then all of that to be above here. So we'll see. That's what it's got to do. And it really is like between now and the end of the week, it may not do very, very much compared to what it did yesterday. So we'll see. 4-hour time frame. Yeah, resistance, horizontal levels of resistance here. Price actions, generally speaking, been going sideways. Has got higher lows. Still not yet broke a higher high. And in the context of previous price action, it's a downtrend. You can't really work that out. And you can see potential continuation divergence with that downtrend coming in here. Not all that far away from the 200 period moving average, up at 1607 on the 4-hour. Your 8 hours obviously going to be lower here. What is it though? 81. Right, so back up to yesterday's highs, all it looks like you might be able to do today at the top side, 1484 or so. 50 simple down at 1250. It may well be that it comes in around those levels. Low 50 simple, test it there. That would break down below the 50 simple on the daily, and then you'd be struggling overall and be thinking, here, this continuation, this ascending triangle ain't for shit. We're going to get screwed, yo. Trades, but we're going to get screwed, yo. If you did get screwed, it's going to 777. So horizontal level here, you can see it's at 1592. That's significant. Needs to break above there on the daily. Once it does, you'd be looking for the 200 period moving average. In advance of getting any of those places, you could take that most recent high and the most recent low and say the Fibonacci says 236, where we need to hold is 1255. That was good that we broke above there, having found some resistance. Open and close above it. So far, so good. Golden pocket comes in at around $20. So this would be the target, for the top of the wow. May well be that you get a retracement at this stage back down to that 236. That's what we talked about when we drew this in May. We said that, at this stage, everything like this was going to maybe happen. And I said, look, it can't possibly happen, but maybe it then does. And then here's a very simple hold above that. You'll not come back to that 236, obviously. If you do, I wouldn't rule it out, and it would still be bullish. You could catch this upward sloping trend line with this ascending triangle. You would, at the first instance, think that it would likely do that unless there's something brutal happened on the way down. Catch that 236 at the same time. That would suggest it's happening around the 1st of July or not soon after. And then possibly getting a move back up to test this golden pocket and that 200 period moving average and this downward sloping resistance all around $20, $22. And if it exceeds that, it could go up another 5. But that would be what I'd be looking at for a positive move from here, which is like speaking to like counter to the general market and would be saying that SPY is going to recover and that everything was going to be wonderful, or that somehow AMC was going to trade counter to the overall market. So down to the 4-hour time frame, you've got like above the 50 simple, below the 200. That comes in where you might see this peak and the W. If that all happens, like seriously, it's messed up shit. Right, I might shoot myself in the stomach with a shotgun to see what happens with that. There's no, I won't. No, just don't say those things. There's a golden pocket, which is $20 there. It's the same thing we talked about, but the 200 period moving average on this time frame is obviously a lot lower in it, around 1623. So that would be resistance short term. It's also confluent with this D point on the previous high in the formation and X where it started. So breaking above that, which itself was a test of a 200 period moving average. When we got there on the hourly, as you can see back here, breakdown, there's a test. D, you got above it, didn't manage to hold it, and then subsequently price action was held generally below those levels. And you had the 50 flirting with the 200. It's about to go through it now. Having tested it and gone through it, tested it and gone through it, and come back like 3 or 4 times here. You can see there's also an inflection at this point where it meant the breakout. It could well come back to those levels at 1254 and test this cross. But you've had so many tests of that cross and gone through it. Price action went through the 50 and the 200 as this most recent one was happening. I don't think this needs a test, nor can it be traded from a golden cross on the 1-hour time frame. It's a stupid thing to be trading really in and of itself. It has to be confluent with everything else like there is that we've talked about though. So does it make it there? Well, we could look at a number of things still at the 236, 1260, 1255, 1256. That looks like the next good re-entry if you're bullish on this thing. Somewhere around that area. If it comes with a test of the 200, all the better. If you don't hold those levels, I'd say that's quite bad. And you might be coming back down to test ultimate lows within here or lower, 777. And if I wasn't taking it there, the next place I'd be looking to would be in at around 9. And if I was absolutely desperate to just buy it off out of my face, I'd be looking at 1030 something. But I'd be anticipating a test and this being successful, and then this is what people will be looking for at the time, moves up here, you know, good $8 on price action. That's what people will be looking for. Whether it happens or not, we'd have to check in with things at the time, because on the smaller term time frames, you're only looking at a bit of a retracement here. And if GME completely collapses, I could imagine that it would be a little bit of a negative effect on AMC having all reached an inflection point within certain time frames. Overall, it's not. You know, this is a 4-hour time frame, and whoops. No, this is a 30-minute. Well, anyway, you can still see it here. Like the downward sloping resistance that GME finds itself at, AMC doesn't yet. So there's lots of potential relief for it should AMC move to the top side while GME isn't completely collapsing, because GME has been bullish-ish recently. So, yo, that's pretty good, huh? That's pretty good. Do you want to see what it looks like up? How is everybody then? Feeling to find a day? Great. Have I got the bottom of the chat box? I have. Lisa, great to see you. Cookie, legend. Lady Kim, Sammy O. Il Baker, how you doing? Busy entertaining guests to study. Oh my goodness, that's so naughty. Martin Ewan, angry outburst, doth butter my parsnips. You won't catch any of them around here. Very calm, relaxed, low blood pressure kind of deal. What a great stream. Jamie's fucking amazing. Thanks, delete yourself. Cheers. Cheers, Il Baker Matthews. Because, yeah, well, it's good to feel like I'm doing a good job, right? The idea is to level you up, you know. You know, the idea is to level you up. And that we want to make a difference. We're not joking. We're going to make a real difference. And we're already doing it with lots of people. It's also this other thing that's really frustrating. It's like, you know, I always hear about people getting scammed. It happens a lot. People I really like in chat box. You know, the best of you are susceptible to it, because the scams themselves are so complicated and tricky. And you have to be very careful that you're speaking to the right me, that it's the actual me, and check the social media name that you're speaking to and see that it's me. And if you've got any doubt, send me a message on Twitter, right? And the real me on Twitter, _TradeSpotting. It's the real me. If any doubt, if you're talking to me anywhere else and it's the real me, send me a message there and I'll tell you, no, you're not talking to me anywhere else. It's all lies. Like, whoever's trying to get money off you is lying, right? And if there's anyone who's ever saying, let's do this, right? And it's not invest in yourself via this course, which is an educational thing that'll teach you how to control your own destiny, then the person's trying to scam you. If it's like, well, there's this scheme and we might get rich from it and I can help you, that's a scam, right? If it's not a scheme, it's you learning and leveling yourself up and controlling your destiny, and it's via the course, which is linked in the description of this video, then that's the only thing we'd ever be talking about. That's it. That's the only thing, right? That's it. There isn't anything else. That's it. So anyone else talking to you about invest here or do this, it's a scam, right? It's not me, it's a scam, whatever it is. So that's it, right? And if that has happened to you, right, I hope they haven't taken so much money that you can't afford the course, because that's the way you're going to get it back, right? Now, I would tear the world apart if I could help people that have been scammed, but I can't, right? I can't do much about it. So I rely on yourselves, but taking care of yourselves, and do what I can, but there's only so much. So, anywho, don't get scammed, right? Don't get scammed, anybody. There's the link. Thanks very much, Lisa. I should pin it. How did the poll go as it happened? End poll. The question was, how do you feel, and do you use or do you pay attention to consumer sentiment data? No, 43%. Good on you. Yes, 36%. Well done. No, what if it's that? I feel fine. 20%. Nice. Yeah, we put that in there because it's just a very attractive answer, isn't it? Like, yeah, what? There's other people? Oh, I thought it was just me trading the world. Me. Oh my God, so many impersonators. There are so many. It's insane. There's so many, and the good people get sucked into it. It's so annoying. And they're very sophisticated. I understand why you get sucked in, and there's no shame in it happening to you, because it's happened to loads of people, like loads and loads of people, to the point that had it been me doing it, I'd be millionaire from it alone, right? I'd be a millionaire from it alone, and I'd have. It's so annoying, right? It's so annoying because I actually want you to take the course, and we really want that to build up to be a big fund that people can run in future. And it's so annoying when people are getting scammed. It's annoying. It's really annoying. Right, because we're trying to change the world here, It's like stealing the fuel from that. We could all be doing like that, and you don't get your scammed money back. Oh my God, so many impersonators. Oh my God, Discord is a safe space. Yeah, Discord. If you're on Discord, you're fine, right? And if somebody contacts you in Discord who's got the same name or whatever, but that doesn't happen. The Discord is safe and it's well done, well moderated, and well looked after by good people. So you're safe in the Discord. Thanks, Jamie. Dropping James as usual. Thanks, Sammy. Yo. Amazing trade spotting. Thanks, Kim. Any chance to look at SPY? You're sure, buddy? Sure, buddy? Right, so you've got a flash at 376.9. You had this trade idea here so far. I wouldn't have necessarily looked to hold it above the gaps. You've got a couple of gaps looking left previously. SPY opened what here? 393. Wait a minute, going to the daily time frames. It was actually happening trades, but right, 0.02%. Yeah, nothing's really happened here. So, SPY, you had a couple of gaps, and this was the potential trade. You came back and filled in one of the gaps on this move, on this trade already, and then you hit where I thought would fine at the golden pocket here, and that was enough to not be too focused on short positions at this point. Certainly not taking them. Maybe closing them, but certainly not taking them. I mean, closing them there when it got into that area was even better. But like this area, even if you're using them as a cover, I mean, that's not your objective, right? Because you're not just going to close them. We're a cover, right? So anyway, right, so you'll know what you're talking about and you don't need me to say it. So here's the goal, there's the gap, and it came back and filled in that much of a muchness. I don't know if it actually has done completely, but much of a muchness. And then price action continued up to fill this gap, creating its own one in the same move. And a little bit of retracement now, you've still got a gap above, and you've got the 618 or the 1618 at 398, and that's where price action that's where that SPY probably wants to go. Probably. It's just it's got this gap below, which is the bottom side of that's in at 376.60. And then what time frame was it we were just on? And we saw a flash there as well. Is it the 1 hour? No, but the 50 simple period moving average is very close to it's on the 30-minute time frame, and that's where on the 1 hour the 50 simple is, and it's like a flash, and it's rock outcrops indicator, and like he's a genius. So, oh shit, you're not looking at any of this. Silly me, eh? Well, there's a fax machine there. You could have told me all about it and I would have noticed. I would have got it printed out and everything. But here we are, Tuesday, changing the world. Right, so there's a 200 period moving average, there's a 50 simple, and there's a flash, right? Price action, if it doesn't hold the 200, the 50 simple's already below it, so I'm not going to look for it as support. I'm going to think price action probably comes back and fills in this gap that we can see, touches on this flash. And then we'll see what else it does. With regards to this, it would be a 50% of the previous move, would be around at 373, and that might be the most you get on that down move, should it push that far. If not, which I think it will do, because you've got bearish divergence to the top side here, and you've lost the bullish control zone, and you're pushing towards the center line. That's a 30-minute time frame, and you've got a possible cross coming through on the MACD if price action drops below that 200 period moving average, and look for this to extend at least to the center line before it turns around, and then price action. So there's a flash here. It's very, very highly likely it gets filled, and that would be where it moves to the downside in the first place to look to. Should it go down, top side you've got a 1618 that comes in, fills the top side of this gap at 399. 400 is just a breath away, so 400 would be the place to look to in the top side. Does it get above there? Quite possibly, right? You've got a 382 around 404. I could see it going there if it did push up, but it's already got bearish divergence. Maybe it gets another touch of it with another move to the top side, fills that gap at the 1618, and then I'd be thinking, right, you're coming back from 400 or 404 at that stage to fill this 30-minute flash, and if not that, then at least look to that gap, which is all the way up to the daily time frame, right? All the way up to the daily time frame, yo, bottom side of that 378. This isn't really a gap, 369, whatnot. I think that's probably done, but cross at this time frame, well, we'll see a long distance below where you'd want to be for that. So, if SPY does move up, I mean, there's also this 236. Where's it coming from, the low to the high in this part of the move? That's the low. This is the ultimate high, so that's the mini fib that we were looking at there. And then this is the overall Fibonacci. From this dip that you had, this retracement from the all-time high in SPY down to around 360, and what you might call it, you've now made a retracement back above a 236. So that's significant, right? That's significant. You've had an open, no close above it really, and then an open, but then you're already now no close above it. So this is yet to be decided. I mean, you've pushed above it, violated it, but I can't say you've technically broken it. It would do there. We need to start all over again and get the open, close, open, which if it's going to hover around here means another 2 or 3 candles, which just speaks to it being going sideways up here for ages. That's not going to happen, is it? So it either moves up or it breaks back down, and I'd say that doesn't take till the end of the week to make the decision. 50 simple at the top side, obviously there on the daily and around 400. You know, that this looks like 400 to me. Looks like 400, and then, you know, if it isn't, it's because it's going here, which doesn't necessarily guarantee 400. It might then break down to 350, right? That's what we were looking at here, Rocky and I, thinking it'll be coming in around these levels if it doesn't break up above 400. And so you want it to come back, and like counterintuitively, right? You want it to come back and fill it. If you're looking for long-term moves to the top side, you want it to come back and fill in that gap. If you've got a put and you've changed your mind about the overall market, then you want it to come back into that gap so you can get rid of the thing. And so yeah, I mean, generally speaking, and if you want it to collapse, right, on the counterintuitively, if you actually want it to, on the other hand, if you wanted it to collapse, you probably would want it to get a rejection at 400 and fill this topside gap while leaving this gaping hole below, which would be, you know, a magnetar on price. It would take it all the way back. So, I mean, from my point of view, I'd want it to go up, right? And so I want to see it come down and fill that gap now, before 400. If you're bearish and you're like me, but you were for some reason bearish, which is fine, because then you'd be looking for it to go to 404 first and go up. Isn't that funny, right? But that's what I would be looking at for sure. Right. Don't want that, either of those gaps on the other side of my trade, and that it's just going to be bothered, you know. I want to have a nice life and it's not full of anxiety and stuff, and right, I can't be spending all my time panicking about SPY, innit? So that's what I'd be thinking. Please share. TradesBond, please share. Yeah, please share this. Charts. Oh, I've got them up now. Oh, I've got them now. Now I've got them. I shared them, so I did. Don't know what I was saying when I wasn't on the charts, but there's like gaps, and that's what the overall impression that I was. You know, your stochastic's still pushing to the top side, and you've not met like a definitive rejection area, so it might continue. You're below the center line here, so that's a bit shit. But if it does break above it, I'd say that's positive. And you've got your MACD cross there, but you're like miles away from anything that might give it a valid signal. So it's like useless. Really, it's useless. What you're looking for is price action. Just go there anyway, and then collapse and fill that gap, and then, you know, then you've got probably all sorts of trades you can get out of anyway, or good, or do whatever. Anyway, yeah, I mean, do you want to get out of trades? I generally think that it might be a time to start scaling into certain positions. I don't know, right? Depends, you know, what you feel like. It's definitely not financial advice, right? If everything gets wrecked and then you get wrecked, that'd be a shame, because I'm not going to get wrecked. I use stop losses, so I'll definitely not get wrecked. You know, I can't afford to get wrecked. I've got a family, and I've got myself and other people that rely on, not really, but like, you know, I come from a family and I try to help people. So I can't be irresponsible. You know, those great fun as it would be to trade without stop losses. Loads of fun, right? I can't afford that kind of fun. You know, I don't think anyone can afford that kind of fun really, but you know, I definitely can't. What's GME doing? 2.6% down now. Oh, dearie me, right? 200 period moving average there on the daily. There's a 50 simple. It's down at 122. You're still not there, so you probably go there. Wreck the like button only, yes. AMC 3.47. Catch it. 1250 we're thinking, didn't we? Somewhere around there. 56 maybe. That's what we're looking at. Right. So thanks so much for everybody for being here. Thanks so very much for everybody who supports the channel with a member. Never a day without TradesBond's Gem of Wisdom. Thanks, Magic Gear. Wow. 14 months in a pink headband boot. Nice, like the pink ones. There's the red one to come, though, isn't there? Lots to come, in fact. Geez, I'm busy all the time. There's lots to come. Lots to come. So, yes, anything else you need to know about these things, you know, you can always write them in on the Patreon there. If you're on Patreon, you can always write under the post where I share everything. Like today I put in, sorry I was late. I wrote stuff out today and put it in underneath the Patreon video for people to have to read in case that was helpful. And then, so, you know, you can go and read that, right? So why am I talking about this? Yeah. So, yeah, you can ask questions underneath it and I'll answer them. Hey, amazing, eh? Maybe on a video, live video, whatever, if that's what you want. And, but you all know that. You can ask questions here and at me and I'll answer them too. But not now, because I'm going to have more of this coffee. Oh, it was good. So, yes, what else is happening? Well, we called everything, right? We could look at something else, E-minis or that. What we look, here's NASDAQ, right? What did we say? We were hoping for it to keep going at the top side as well. Golden pocket. Drawings. Go away, drawings. Thank you. Fill that gap yet? Oh, no, it didn't. And then... Here. 1, 2, 5. See, we got it. We did go where we said it'd go to. Chat. We said it would go to here. Chat. I don't know why I didn't draw it. Oh, I did. I drew lots of it. Here, there's a trade and everything. Fucking... I don't know. This feels like the best, worthwhile job in the world. Tripajaro, they should give Jamie Mystic Meg's old spot on the lotto. They should, aye. See, Rocky was doing that. Guess the closing price of... KuCoin have got this competition where you guess the closing price of whatever, Bitcoin or whatever. And it's generally speaking quite difficult. But Rocky and Bulldog Buchanan, both of them won it or something recently. You know, it's just a bit ridiculous. That's the community you guys come from. So like, and this is people like just learning, starting out, and that guessing the closing prices, of winning competitions on exchanges. There's thousands, there's millions of people use those exchanges, right? Millions, hundreds of thousands on that one at least, probably millions. And tens of millions, hundreds of millions of dollars, and they're guessing the price is better than everybody. It's brilliant, and they win shit in that. It's brilliant. They're all afraid of me. They're afraid of me. The other people are afraid of me. I know, it's fine. It should be. It's true. They should be. Go through them, right? I would, Will do. Somebody, one of these days, live on a video, I'll go through them terribly. It'll be awful. Will be. All their fans will hate me, and they'll hate me, and they'll feel sad, and I'll feel bad afterwards because I'll know that I overreacted and that. But it's going to happen. That's the way it is. I know it. It's so clear, plain as day. Anyway, until then, no. So yeah, great. Thanks. Sign up to the Patreon. You're already on the Patreon. Become a member of the channel. Fuck! I didn't share it. I didn't share this on Rocky's Discord. Oh. Never mind all the other places said I was going to do it eventually. Right, so I'm an idiot, but then I was behind. You know, it was a tough day. I was behind, innit? So thanks very much, everybody. 3 to 8 a.m. here in New Zealand. Oh my goodness. Good night, Martin. Good morning, everybody else. Thank you. Thank you very much for tuning in. Hit the like button and whatnot. Hit the like button. 125.74. Just keeps going, doesn't it? Look at the drawings. I love sticking to the drawings so much. Pardon me. Right, the drawings. Oh, he loves the drawings. Tune in for the Rocky show later. Yeah. Thanks, everybody. Thanks.